The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we're coming back here to the Diagnostic Trading Hour. And let's check out where the markets are right now. We got the S&P up 4.5 points. We have the NASDAQ up 6.75. The Dow is currently up, 27 points. The Russell up just a mere 60 cents. So pretty quiet in the indices so far. We got silver is down almost 0.5%. We got copper basically flat on the day, and gold's up a whole $1.60. So not a big move there. We got oil at 51 cents. Natural gas is down 3%. Corn's currently down 9.5 points. Soybeans down 25.5. Euro dollar currently down 13. Pound dollar down 23, and Aussie dollar down at 6. Euro yen is up 26. With U.S. yen up 27, pound yen up 17. Dollar CAD is down 9, with the dollar franc up 30 pips on the day. All right, so we got a brand new week. We got FOMC coming up this week. We got some other reports, some of those big, some of those not so big. And so let's check it out. Let's go through and just talk about the week and see what we can make out of this week and maybe what we can make this week with news trades. And I do a lot of news trades on Nadex. Even if you're not a news trader, you're going to want to be aware of the news when it comes out so you don't get steamrolled by it. And if you don't have a Nadex account, what you want to do is hop on over to TFNN and get a demo account, free account, cost you nothing. Just click on Nadex banner right there. Once you've done that, click on trading and click on demo trading account. Fill in the username, first name, last name, phone number, and email address, and then click apply for demo. After you've done that, go ahead and click on log in after you got your email, because what will happen is when you put everything in, they'll send you, obviously your username you already have, but they'll also send you a password, and you can log in right away and check it out. To get a live account, simply click on create account. It's only $100 to fund an account. You don't have to worry about having contracts, having stocks called away from your put to you. You don't have to worry about future contract delivery dates, last trade dates, taking delivery. You don't have to worry about margin calls on anything. So it makes it a lot simpler to trade. And obviously most of these are for, those who are day trading, for those who want to hop in and out of the market, throughout the day, whether it be over a course of, 20-something hours or course of minutes, sometimes seconds. So it's depending upon how fast you want to trade, how much you want to get involved. But there are definitely opportunities, whether the market be flat or whether it's trending or whether it's really volatile. And one of those opportunities is news, because when news comes out, you can look at certain news announcements that have a consistent high impact on the market, and then you can use that and go, okay, well, is that impact, if it's usually a large impact, then maybe I can go in and I can go both directions. I can buy above and sell below the market. And but how are you going to do that? You're not going to be able to do that on spot markets and future markets, but you can do that over with Nadex spreads or binaries, depending upon sort of what the trade allows for. Well, let's look at what we had today, and then we'll go into the rest of the week as well as we walk through this. Today we had a couple reports come out. Pending home sales came out this morning on potential home sales coming out. It came in at negative 5.6% on an expectation of 0.5. So that basically is everything in process, but still just waiting on the closing transaction. That's not good. Obviously, that's a massive decline, one of the largest declines we've had. So, of course, just spurs on QE. And we're sort of in an era now where bad news in many ways, such as home or unemployment, can actually become good news in the indices, simply because, well, bad news means more quantitative easing. The market is addicted to it, loves it, and that's why you see the market not necessarily just getting rocked right when that news comes out. Now, of course, it can definitely have an impact on FX pairs, and you may even see maybe a negative impact on the indice for, say, 15 minutes to an hour, but then things just resume on back as if it never happened. So it's really interesting just to watch how the government interference has messed with the markets all along here. Tonight, it is important to note that the RBA, tongue-tied there. The Reserve Bank of Australia, Governor Stevens, he's going to have a speech tonight at an investment conference. So people, of course, will listen to see if they can hear any kind of interest rate clues for the Aussie. So that might cause a little Aussie volatility a little earlier in the evening. The yen has a list of minor impact reports, their unemployment rate, their household spending, their retail sales. Not really expecting any major surprises on that, but that should add to the yen volatility as well if you're a yen trader. Be aware they'll start up around 7:30, and where you're going to have the household spending and unemployment rate in Japan, and then you'll have the retail sales at 7:50. So rolling on over to tomorrow, what do we got on the lineup? Well, a few things happening early in the morning, but nothing that really should rock the markets. However, we are going to go into the morning with a core retail sales here in the United States. So that number is going to come out. And this release date is a delayed release, okay? It was due 18 days ago. So it's just now going to be coming out. And so just be aware of that. It is a delayed release. The expectation is 0.4%. Along with it is going to come out the U.S. PPI number, which is also 18 days delayed. The retail sales here in the U.S., which is also delayed. And the core PPI, which again is also delayed. All of those delayed by 18 days. Okay, so those are all going to be delayed reports, not your usual timing on them. That should add a little volatility to them. However, they're not usually major market movers except for on one pair. There's usually a pretty consistent high impact, and that's the euro-dollar. The euro-dollar pretty consistently moves. About 70% of the time, it breaks 50 pips, a little over 70% of the time. And the average range from high to low is about 60 pips over the last couple of years. So you could use that to go in and do your trades right there on the euro-dollar. Like I said, about a 60 pip high to low average range, and that could give you a good opportunity to go in and do a potential spread or strangle. I prefer spreads. And that report is going to come out at 8:30. So you'd be looking at either the 9 or the 10 o'clock, possibly even the 11 o'clock spreads. I'd look at all three. The benefit of short time is, of course, it'll be a little bit cheaper. The benefit of more time is you have more time for it to move. So that way, if it's not a big mover in and of itself, when the U.S. market opens at 9:30, then a lot of times you get some more volatility, which can help at least help you exit that trade at break even, if not help push it into profit, depending upon how much the number is off. And on that number, what we're looking for is a mark off about 0.5%. So the expectation coming in at 0.4. So if, we get like a negative 0.1 or a 0.9, we should expect a very good size move on the euro dollar. There'll be some other pairs. Can't really butterfly it though, because again, when it expires, even the other pairs, they're not super volatile, but not necessarily ones that I want to butterfly either. So they have a little more volatility, just not probability. Meaning, like say the pound dollar, it moves almost 70 pips high to low, but it only hits 50 pips 45% of the time. So, there's too much mixed volatility in there to do a comfortable butterfly. But the euro dollar has a pretty good lineup, like I said, on the 70% exceeding 50 pips, and with the average range being a little over 60. So if you can find a good trade in there for about $40 risk, then you'll have a solid trade. And the way that you'll do that is you'll simply hop in, check out the scanner, go over here, and on the maximum risk margin, I usually put like 100 when I'm doing a straddle, and then usually put 1 right here on risk-reward ratio for straddles. And then you choose your market, i.e. euro dollar. Once you've done that, then you also may want to limit the minutes. I guess you could show them all if you wanted to, but just make sure you're really paying attention to that expiration time. And then you want to match up and make sure you find a good low-risk straddle. A straddle is where the floor, the lower number, on the bought spread matches the ceiling, the higher number, on a sold spread. So if I go in here and I find a good low-risk one, let's see, we got this one expires at 3 o'clock. And this one expires, that's a little bit bigger break-even distance than I want. And then we go over here. Okay, so that gives us $37.90. So now let's go find the other $37.90. There we go. And so now I have a $10 risk trade. And basically if the market moves up or down, about 10 pips, I'm going to be break-even on the trade because one side will make enough to cover the loss on the other side. Anything past that between now and 3 will just be additional profit. And that's really how you do it. So that's really all there is to it. And combine them together, get as much time as you can. And I could even look at like the 2 o'clocks, but check out the 2 o'clocks. I mean, that's $12 risk, 3 pips to break even, but $12 risk. This one right here on the sold side, if I was trying to match it up, then, I'm looking at 14 pips to break even. So this is, just the best trade with the most time. And you want to be able to look at all of them. And I've been surprised lately. I've actually found some that were like maybe $1 or $2 more risk or the same risk that had 5 more hours to expiration. So if that's the case, I'm definitely going for the longer-term expiration. And the scanner makes that easy. So all I'm going to do is I'm going to look at first thing, I want to match them up, okay? And I'm going to look at my risk and then my reward. And I'll see, is there a better choice? Sometimes there is, sometimes there isn't. And in this case, that is definitely the best choice. Like if it was, the report was coming out in 30 minutes, like that would be the spread I would choose, okay? And just use the scanner to help you find those really, really quick and easily. Now, what else do we got on the lineup? Like I said, that's going to be the main number. Out of all the numbers coming out, the core retail sales is going to be the main number to focus on. There'll be a consumer confidence number coming out at 10 o'clock. Not really a big deal there. Business inventories will be coming out also at 10. Very low impact. It'll be coming out late. And that's really all we got majorly that we need to focus on for the lineup. So that's really going to be that 8:30 report on Tuesday is going to be our big focus. Okay? So just make sure you keep that one, on the list. And then let's see, what do we got Wednesday? Well, Wednesday we're going to have the ADP NFP report. And we're also going to have the U.S. core CPI, and we're going to have the FOMC interest rate. Okay? So let's check out what do we got on the ADP NFP employment change here. And we usually get some decent volatility, not as much as you would think. So now the NFP report, okay, the big one, the U.S., Bureau of Labor Statistics, BLS NFP report, we get a lot of volatility on. But we usually don't get a whole lot on the ADP report when it comes out. And it'd be easy to think that you would, but like I said, often you don't. And so you also want to look and see, is there anything else that's around it that might help push it further? And there actually is. So the CPI that's coming out late, the U.S. core CPI, again, that's another late release. So it's almost all caught up. It's got 14 days left. And then, so I think this week they'll actually have every report caught up. But the core CPI that's coming out, that actually has a little bit more volatility than the ADP NFP. So you could possibly get in before the ADP NFP and then get out using the actual, but more doing it to trade the CPI number. And again, the euro dollar is the clear winner in this case. 80% of the time moving 50 pips, and then the average range being 60 pips. So if you can get a decent risk reward on the euro dollar, it really is the best lineup across all the currency pairs on this report also. So stay right there. When we come back, we'll check out the rest of the week and even talk about the FOMC and some ways to trade it.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so looking over everything, like I said, the NFP, the ADP NFP is usually not the biggest market mover in and of itself. The core CPI, though, does help provide a little bit more impact on that report. They also have, of course, oil, so you could check out the crude oil inventories. Even though often there's so much volatility built into oil anyway, it's not necessarily the best one to go after. Now, the big news, of course, will be Wednesday. Of course, we don't expect any new news. But, of course, everybody will be analyzing every statement to see any possible, things. And they put that statement out. Is there taper happening in October? Obviously, no way. When will it potentially happen? Most are saying it won't even potentially start till March, and it's all going back and forth, if ever. But, anyways, at 2 o'clock, that statement's going to come out. And there's several ways to look at trading that statement. One of those, of course, is doing binary strangles or spread straddles on it. But one of my favorite ways, okay, and because pretty much everything moves quite a bit. Euro dollar, it's 73 pips 95% of the time. Pound dollar, 83 pips, 83 pips it moves, or 83% of the time it moves 50 pips. So dollar CAD not as good, dollar franc not as good, dollar yen not as good. Aussie dollar is okay. But really, euro dollar, pound dollar, your two main ones. Like I said, euro dollar again, 95% moves 50%, 50 pips, and 73 pips high to low. Pound dollar, 83% of the time it moves 50 pips, about 70 pips high to low. So those are your two main pairs you'd focus on for a straddle or a strangle. Now, my actual favorite play to do on this is to go in, and I tried to do them last time, but it just wasn't working out. Like, the implied volatility was so low before the report, and it was so high afterwards, it was really hard to get on either side. But you can check out, other FOMC dates like the two before that, and I've done them. And one of my favorite strategies, if there's some implied volatility there, is to go in and actually do butterflies, to range-bound trade them. So we'll check those out. We'll see if there are any, if there's enough implied volatility in the option pricing to do a butterfly. And to do a butterfly, what you're going to do, okay, so, we'll do one that's going to expire at 2 o'clock, because usually the market is very, very quiet. I said usually, okay, very quiet. There seemed to be some sort of weird leaks that came out last time that really messed things up, and so we were really backing off and being shy on those trades because it was not the normal market activity. Usually it's just the quietest market out there. So anyways, but we'll be watching. And if it is quiet as normal, but we do have some implied volatility on top of that, then we're going to go in and we're going to look and see if we can find some trades. And because what happens is before the FOMC comes out, usually the market just goes flat, like nothing happens. And so if that is the case, then we can do a range-bound trade. So we may go in and let's say we were doing, we could look at, say, the Aussie dollar. And we'd find ones that would expire at, 2 o'clock, but we'd hop in. I mean, you could hop in as early as you wanted to. The earliest I would hop in is probably like 12:30 on the trade. And about 90 minutes before, it moves 26 pips high to low. So let's say we were an hour and a half out right here. You got 26 pips high to low. And so you could, look and see, hey, is there a good risk-reward trade that I could take advantage of that's somewhere within that, volatility range? And sometimes there's not at the 90 minutes, but there is at the 60. And sometimes not at the 60, but there is at the 30. And so we'll walk through those numbers, but we're looking at about, 26 pips 90 minutes before, 20 pips 60 minutes before, and 15 pips like 30 minutes before on the Aussie dollar as the range of high to low whenever doing these contracts. And one thing I've done before is I've actually went in and I've layered in. So this is a little bit trickier, okay? But, the market's sort of going down. You sort of see it bouncing off a little bit. You go in and you do a buy. And then as it moves back up, remember, 30 minutes later, you have that high to low number. So now you can look at a sell and go, okay, well, that's usually within the range. So it really shouldn't break out of this upper range at this point, and allows you to add on another contract. But we can do these across the board. I've literally done them on, I want to say, at least 5, if not 6 currency pairs at the exact same time. Like I said, that was like maybe 2 or 3 FOMCs ago. I did like all of them on the air at the same time. It was pretty crazy. And I literally just going through and doing binaries right down the list. And for expirations right at 2 o'clock, right before FOMC comes out. And then, of course, I'll hop in like right as it's coming out. Like right before that, I'll hop in and throw on some spreads and binaries and look for some potential trades across the board. But again, we got to look for, what statements are going to come out, how volatile is it going to be. But you can usually count on volatility on the FOMC. It's the one thing I can say you can definitely count on. And so that's your straddles and strangles, as long as it's not too expensive. Like let's say the average move high to low is $70 or 70 pips on your dollar. You don't want to go in and risk 60. It's not going to do any good, right? So you want to make sure you have a good, 1-to-1 risk reward probability in there. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, well, let's check out what other news we have going on Wednesday so you can get your trading plan together. Like I said, you got the FOMC at 2 o'clock. New Zealand will be releasing their official cash rate, and there is some decent volatility. Can't trade that on Nadex yet. They are looking at adding Aussie yen and Euro pound soon. But if you are a New Zealand dollar trader, about 70 pip range, high to low. So has a decent movement right there on that report. And let's see, what else do we have on that same day you need to be aware of? We're going to have my business confidence report come out of New Zealand as well. Shouldn't expect a major move on that one. Building approvals will be coming out of Australia. Expect a solid 15 to 30 pips. Nothing major, but should cause a little volatility in the Aussie for you Aussie traders out there that like to trade at night. And even if you're not aware of the news, you better be aware of it whenever those reports come out. We got a monetary policy statement coming out of Japan. That's on a tentative schedule right now, so trying to see if I can get you any more details on that report. But let's see here. I know the last time I looked at it, let's see, I want to give you, because one of the things I'll do, I'll go and I look at when the report came out last time. So pretty simple, obvious. But if you look at when the report came out in previous times, even when it says tentative, you can get a pretty good idea of when they'll release that monetary policy statement. So if I look at, like, say, the last 4 or 5 releases, I'm seeing that it came out at about 1040, 1050, So right between 1040 and 1050 is about when I should be expecting that release to come out. So keep that one, on the top of your head there. That way you're aware of it. But that should be the last major report. But it's going to be in the evening about 10:40, 10:50. So if you're a yen trader, you'll definitely want to be very aware of that. They'll also have an outlook report coming out at 2 a.m., and then they have a press conference. And again, they're so nice to do this at tentative times. But if, again, I go back and I look at, say, the last 4 or 5 releases, then what I'll be able to see is we got a release at about 3:20 is the pretty average time of the release for the yen press conference. That's Thursday morning, okay? So yen press conference Thursday morning, after their monetary policy statement comes out. So just be aware of those things. And if, like I said, if you're trading currency, that should give you some nice Aussie, along with the New Zealand news coming out, with the yen coming out, should get some nice Asian currency pairs, cross FX pairs, giving you some decent volatility for trading. Now, going on into Thursday, we're going to be looking at the GDP, and of course we'll have unemployment claims as well. But the Canadian GDP is coming out at 8:30, and on that report, not usually a massive market mover in and of itself. It does usually move about 55 pips, but it only moves 50 pips like 40% of the time. So be aware of that one. You might even potentially look for if there is a butterfly into the news, like maybe expiring at 10 o'clock. Okay, that might give you that kind of room. Maybe even 11, but really just not the best trade. Unemployment claims has not had any significant consistent, and that being the big word, consistent impact. And then we go in, we're going to have the Aussie's going to have their PPI number coming out. And again, not a major impact report in and of itself, but it will cause some Aussie volatility. So, just trading with the trend, trade with the report when it comes out. And then we'll have a couple Chinese manufacturing reports, the HSBC final manufacturing PMI and the manufacturing PMI coming out of China. Usually not a massive market mover unless numbers are just really off. Friday, we got France and Italy are going to have bank holidays. That shouldn't really have any impact. And then we're going to have I'm trying to figure out, I know we have a couple other things here. There we go. Okay. We're going to have the ISM manufacturing PMI coming out of the U.S. That report does have some consistent effects. Again, euro-dollar sort of being the leader this week on these reports. So about 70% of the time breaking 50 pips and an average move of 60. So sort of keeping in line with its normal thing there, but euro-dollar being the lead when you'd think it'd be pound, right? So on some of these, but it actually is the euro on this one. And taking the head, it's pretty close on the pound, but a little higher probability of hitting that 50 pip mark. And let's see, we also are going to have the UK manufacturing PMI. So that comes out at 5:30 in the morning on Friday. And remember, all their reports are now like an hour later, right? Because they just had their daylight savings time that kicked in. And that report on the pound dollar is literally a 50-50. 50% of the time it breaks 50 pips, 50% it doesn't. And on average, it moves 60 pips. Pound yen actually has a better volatility skew on it. You actually got 67% of the time it breaks 50 pips, and the average move is 72. So on that pound PMI report on Friday at 5:30, my pick is going to be the pound yen because, again, it has the best volatility and the larger range. So more often it moves further, and it moves further when it moves. So it has both combinations, which I like to see when we're putting them all together. And that really wraps up most of our news for the week and gets us all together. And, of course, then we're going to be rolling on into daylight savings time next Sunday. So, you got to move those clocks backwards. Unfortunately, you got to move them backwards by an hour. So all U.S. and Canadian clocks moving backwards by 1 hour. And Japan will be on holiday on Sunday. And that gets you all the way through the week with a decent plan. Of course, we'll cover this step by step in more detail, as we go throughout the week each day. And, I just like to remind you of, getting your plan together and having everything out there. But again, your main thing is going to be the core retail sales, which are coming out tomorrow. That's the one thing we have on the list. And again, that comes out at 8:30. So have that one ready to go. Looking at probably, like I said, the euro dollar for that trade. And again, reminder that the stats on that are about 60 pip average range high to low, and 70% of the time it's breaking that 50 pip mark. So that's our news trade for tomorrow for straddling and strangling that you want to have on the list. All right. So with that in mind, let's go through. Let's check out where the markets are at right now. Okay, let me pull these up, and we'll get to cracking on them here. So there we go. And back on out. We can see where all the deviations lie. All right, so we got the euro dollar here, moving on down to almost 0.5, hasn't quite hit it, pulling on back up off of that. Check out the Aussie, and most markets pretty quiet right now, but we did get a solid move up to 0.7 and down to 0.5, so we got a solid deviation move on the Aussie dollar. Really good move right there if you check that out. It's up and down perfectly, and just bouncing right off those deviation levels. And we'll go in and check out the pound yen. And on the pound yen, got to move up to about 0.7. Had a gap up and was able to come back down and actually fill in the gap before the day was over. The only gaps I do look at on FX, as a tip for you, I do look at gaps on Sundays as potential gap fill plays for end of day. So when you see those gaps on any kind of FX pair, that might be one you want to look at. And then we got a solid one deviation move if you go from high to low. Again, that's just measuring settlement to one deviation and then going high to low. And so we got a one deviation move there on the pound dollar. It's bouncing off the 0.7 at the moment. And if we go on and check out the dollar CAD. And dollar CAD's been just quiet. I mean, talk about butterfly city right there, right? Not moving at all. And so, again, butterflies, that's where you go in, sort of what we were talking about earlier. But now you just go in here, you pick out your pair right there like that. You go, what's available? And then you just see if you can find one that is comfortable, a comfortable range. So, like this one right here expires at, 3 o'clock. That's basically a 10-tick range. You may or may not like that. Just depends on what the risk reward you can get at the time you enter the trade. But what you'd be saying is basically that if it expires between here and here, you're saying it's going to expire inside that range between now and 3 o'clock. If so, then you'll collect that premium, which right now stands to be $36. So $36, and of course you could always exit it if it hit either strike. It's going to be right on the line, but really not bad. Not a bad premium, not a bad play. It's sitting right in the middle of them right now to help you get an ideal fill on that, and $37 on the trade. So not bad, but anytime you see that flat market, man, that's where to go. Check out those butterflies. Okay, so let's go on down. Let's check out the dollar franc. And dollar franc pretty flat at the moment, hasn't done much. But did almost reach the half deviation line. It did move a half deviation from high to low, but just not a whole lot of activity. It's a quiet day overall. Let's go and let's check out oil. So on oil, we got a nice move up to 0.7, pulling on back at the moment. But again, it's full solid deviation from high to low, which is always what you want to be looking at, always checking out that high to low. We got the S&P. S&P moved up really fast overnight, on up to 0.5 deviations before it pulled on back to settlement. Did a little run up in the morning, had a little negative news, pulled on back, and then just kept going. So right now up, about 4 points on the day. And we go to NASDAQ, see what the Tech 100 there is doing, and it's doing a whole lot of nothing, just oscillating up and down, but hasn't even moved a deviation. So a lot of premium built in. I wonder why there's so much premium built in. Well, obviously, we have Apple coming out. So unfortunately, after the bell today. So usually about 4:30 is when those numbers get released. So anyways, you could look at them. You can check them out. But can't really trade them. The only way you could potentially trade that would be looking at the weeklies, but your gamble would be so slow, it wouldn't really be worth the risk reward. So, but that's about the only way you could trade it right after the bell, is looking at like the weeklies on NASDAQ. Okay, let's go in and check out the Russell. And right here on the Russell, again, a lot of volatility built in. So wider ranges there, but not quite hitting anything except for, like I said, half, maybe 0.7 deviation. I don't think that's a one deviation move right there just by eyeballing it. It's like 99% sure it did not move that far yet. And the Dow. Let's see what we got on the Dow. But the Russell is starting to turn over a little bit, unlike the other indices. We got the Dow right there. It ran up just like the S&P did. Ran up to 0.5 deviations, pulled on back to settlement, oscillated there for a good chunk of the morning before running back up. Now sitting up at 15,528. 28, what is that? 28, 31 points up on the day right now. And we can go over and check out corn and soybeans. So corn, massive move. Look at that. Got a nice solid deviation move on down on corn. And on soybeans, let's see here. We'll look over at these soybeans. So I'll have to check out those deviations right there. But nice move, 1,300 down to 1,275. That's a 25-point move. Our average move on soybeans is usually about 35 points for a full deviation. So not too bad. So good, like this said, tongue-tied. But a good move overall. And let me check out. I want to see. I know that soybeans was rolling on over to December. Actually, it's over to January now. Okay, well, that makes a lot more sense. So let's go over. Let's see if it tied in. There we go. Yeah, I'm going to have to update my chart software to include that one on there. But so looking rolling over to January on that one. Of course, natural gas rolling over to December on Nadex. Make sure you're always checking those out. And a reminder again, the UK and Germany clocks have been set back. So this also can have a little impact on different news reports, like I said, because they can be at different times. So, and it does not, in fact, I was just looking at one of the reports over on Nadex. It does not impact the trading hours of the FTSE 100 or the DAX 30 on Nadex. They'll continue to open and close at their regular scheduled times here in the U.S. So, okay, and it looks like they're also going to be putting some other reports out, but those are the ones that we want to focus on this week. And one of the things like I said, I was going into and I was talking to you about was looking at, like ags. You can go and you can see, different reports on here. You can click on them. You can see what markets lined up. So right there you got ZC 12, 13, and that lets you know like what contract you should be looking at. Okay, and by doing that, you can easily line it up on the correct chart to get everything going for you. Well, now that we've wrapped that up, one of the things I've been talking to some traders about, and they've been having some decent success with, was simply going in, and we've talked about this a few times on the air, but was just doing some really basic, volume spike trades, and looking for any potential reversals whenever you see those spike trades, looking at them around lunch, and seeing if you can find any around deviation levels. So, of course, that's easier when you have a little bit of volatility, but either way, always be looking for the volume spikes. I want to see if I can find anything for you going in. We're going to check out oil, okay? See if we can maybe find something on oil. We're hitting up at 0.5 right now, and but still not really, a full impact deviation level there. So that's still at 0.5, so it's a quiet move. Now, one of the things I want to remind you of is I will go in, okay, and I'll measure high to low. So you can also just pull this right off the diagnostic scanner. If you go over to the deviation page, right here, okay, and scroll on down to an oil futures, whatever. So right down here, and you can find the contract you're looking for, and you can see what is a deviation, like a $1.42 on oil. Okay, now we pull up oil, and then we just simply measure high to low and go, how far was that move? Right there, $1.45. So right at a deviation on that. Unfortunately, we did not get a volume spike right at the level, but I mean that was literally right at a deviation. Over here we got a nice deviation, but it wasn't a volume spike at a one deviation move. We were at 0.7. So we'll see if we get one here before the show cuts off. We'd have to get a nice amount of volume at this moment. We'll see. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So as you can see, we got soybeans moving on down, almost down to 1.5 deviations. Might even be a deviation spike right there. Was able to get that fixed up and taken care of for us. But we see soybeans moving down, like I said, solid deviation move already. And looks like it might even push on down into 1.5 before the pit session is done there. All right, well, that gives us a wrap up, like I said, on most of the markets across Nadex. Make sure, again, if you have not done so already, that you do roll over your natural gas and your soybean contracts, as you'll need to make sure those are correct on Nadex. And what will happen is, like I said, on the platform or inside the scanner, it'll actually show you what contract you should be using whenever you're trading these markets. So, if you're trading soybeans, you need to make sure that you're using ZS, 0114. So, or it depends on, of course, what market you're using. Maybe you're using Think or Swim, and it'll just roll over for you. That makes it a little easier. But you do want to make sure that they are lined up, they are accurate, because if you have the wrong contract, you'll be looking at the wrong price, and you can easily get confused on these. And I want to see if I can show you right here in the Nadex scanner. Well, actually, if you go to either the spread or the binary scanner, either one, then what will happen is you'll actually see right there we give you the symbols. So if we go, let's say we track neutral gas and soybeans, those rolled over today. Okay? And so you can see the symbols ZS0114. So that's actually like the Ninja Trader symbol, or maybe you're using Thinkorswim, ZSF4, would be the one you'd want to use. So because they have to roll over on a Saturday, so because they have weekly contracts that start like on Sunday and Monday. So to ensure that it's the same contract through expiration through Friday, they always roll over, and sometimes it's like a couple days before the normal rollover, sometimes a couple days after the normal rollover. But it's not hard to keep up with. Even inside the Nadex platform itself, you're going to see the name of the contract on every ticket. And they'll even pop up with a reminder, and they'll let you know, hey, there's been a rollover. So that way you can make sure you're looking at the most current contract. So it's just a little bit new for some traders who are maybe new to trading futures and aren't used to having different contract months. They're used to stocks or maybe just spot Forex or whatever. So it's important to understand that that does happen. And you can even, they have the rollover calendar posted on their site, but you don't really have to keep up with it all. It's just when you log in, the message will be right there in front of you saying that the contracts are rolling over. And that's when to stop, log into your platform and just update to the most current one. And, of course, anytime you're placing a ticket, just make sure that, the same months add up. And, if you're using Thinkorswim, you go in, let's say we pull a chart up. Let me put one up here for you. And right there we go. So right there, if I put it up, see, it'll actually tell me like the December contract right there. So if I go over and I put up soybeans, so it's showing, hey, November, but I may want to roll over and look at, a different contract. I may want to look at a different month on the soybeans contract. And so if I want to do that, I'm going to have to put in the other symbol. If you don't know what that symbol is, like I said, the scanner makes it really easy because it puts it together. And I'll show you an example of that here on the scanner where we're listing it, and that way you can go, okay, this is how I do this, because you're like, okay, well, Thinkorswim's defaulting to, November, but I'm supposed to be on, January. And you go in here and we have it right there. It's ZSF4. So you already got the ZS filled in, the /ZS. You just put in the F4, okay? And that'll put you right into the January contract, so you can do that. And people go, well, why are they different? Why do they, rollover on some things is very automatic, other things is volume-based. With this, it's just going to be very similar, simply because they have to roll over on a weekend. They can't roll over like in the middle of the week on a Thursday, because that wouldn't be very fair if you're on a binary contract and it, switched on you in the middle of it to a different market, different contract, different month. All right, hope you all have a great day. Safe day and trading out there, and I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.